So once you break out of 50, I've heard experts and technical analysts, whom I respect tremendously, say that we're uncharted waters, and it could quickly go once it breaks through 50 and sustains that. It could quickly go to 70, 80, maybe ultimately even 100. And frankly, given the demand and given what kind of economic environment we might be at that point in time, I would not be surprised, to see it go well beyond that at some point. So ultimately, I mean, my target, and I talk about it in the book, and I justify how I get to this number, is $300 silver, and I'm thinking we're going to get there in some kind of a mania phase.
Silver has become one of the strongest performers in the commodities space, rising 5.59% over the past month and nearly 25% year over year. That kind of momentum firmly places it in bull market territory, drawing more attention from analysts and investors alike. While gold continues to hold elevated levels, it's silver that's stealing the spotlight. Ongoing geopolitical stress and regional flashpoints are prompting investors to seek safe haven assets. Zhang Yi, CEO of the iiMedia Research Institute, notes that silver and other precious metals are increasingly viewed as alternatives for those seeking protection amid rising instability. Peter Krauth, a well-known silver analyst, believes this rally is just getting started. His long-term forecast indicates that silver will reach $300 during a future mania phase, with some estimates even pushing higher, toward $500. For now, he sees $50 as a realistic target by 2026. If that level is broken decisively, he expects a quick push toward $100. What stands out is his view that silver is now leading gold, with every breakout creating new levels of support. Recent market data support this. The spot price of London silver is up 30.85% this year, outpacing London gold's 26.91% gain. That makes silver the stronger performer in the precious metals sector so far in 2025. Krauth emphasizes the importance of technical analysis in highly liquid markets, such as silver, where key breakout levels often become self-fulfilling prophecies. He points to Jim Rogers, another seasoned investor, who relies on technicals for that very reason. According to Krauth, a clean break above $40 could trigger a major repricing event. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
I still think we're going to see at some point $40 in the second half. Frankly, $45 will not shock me this year. I still feel like $50 is going to happen, and it's going to happen at some point next year. It's feeling more and more like it's going to happen in the first half of next year. And 50 is that sort of elusive but magic number in silver, because if you look at, we talked about technical analysis before. Silver is considered, there may be one other asset, I can't remember what it is, but if you look back, over decades, it will be one of the most significant, if not the most significant technical breakout, price breakout of all time, of all assets, simply because it's taken so long. It will have taken so long to ultimately break past that 50. If you look at all the other metals and all sorts of other assets, they've managed to do that. Silver hasn't yet. So once you break out of 50, I've heard experts and technical analysts, whom I respect tremendously, say that we're uncharted waters, and it could quickly go once it breaks through 50 and sustains that. It could quickly go to 70, 80, maybe ultimately even 100. And frankly, given the demand and given what kind of economic environment we might be at that point in time, I would not be surprised, to see it go well beyond that at some point. So ultimately, I mean, my target, and I talk about it in the book, and I justify how I get to this number, is $300 silver, and I'm thinking we're going to get there in some kind of a mania phase. I still think that, but I will say this. I'm surprised, frankly, that I've heard estimates from people I consider very serious, very accomplished analysts talking about ultimately $500 silver. And so I don't feel like I sound that crazy when I talk about 300. So again, that would be in a mania phase, and that, if depending how quickly we got there, that would wreak havoc, of course, on the whole sort of industrial side of silver use. So, anyways, that's something for another day. But be prepared, and think about taking some profits if and when we get there. As I say, it's just probably a matter of several months earlier than I kind of expected. I'd been saying for probably since the end of last year, we would see, 35 taken out in the first half, and then probably 40 taken out in the second half of this year. We're not at 40 yet, but we're very close. And frankly, if 40 happens sometime soon, or even just in the second half of this year, I will not be surprised at all. And, if the momentum keeps up, I think we'll see perhaps even as high as 45 at some point this year. And I've also been saying that, that sort of magic $50 level was probably going to be at some point next year. That's obviously looking farther out. It's still kind of where I'm seeing things right now, but the momentum is absolutely there. I've been somewhat surprised to what extent the momentum has kept up, but people are starting to pay attention. Gold has been more in a bit of a consolidation phase, and silver has sort of taken the lead, taken the baton, and moved ahead. I've been saying that if you look, if it's kind of been one of these staircase patterns. If you look at how silver has behaved, it was 32. That was a ceiling for a while. The next one seemed to be 34. So once it moved above 34, that ceiling became a floor. So kind of the new step. Once we moved through 36, that became a new step. We're now at what I believe is 38 as the next staircase step. And certainly 40 is, like I say, I've been expecting 40 at some point, second half of this year. And I think that will act the same way. Trigger point, probably, because, these big round numbers do tend to have more effect. And at just the way, 3,000 in gold or 3,500 in gold, had a bigger effect. And I think you're right. I agree with you. $40 will be a big trigger. Now it may attempt 40 and then not be able to close above it, and that may be a tougher ceiling to break through for a while because it's a psychological barrier in this sort of big round number, so to speak. But I agree. Once we get through that, I mean, we'll have come from where we were back. Just perhaps the early part of last year. If I remember right, we were, somewhere close to about 20 in February or so. And here we are at 38, 39. It's just incredible. It's almost a double already. So it's really quite spectacular. Yes, I think that's going to be a big deal. And technical analysis, I agree with you. I do like to watch it. I'm not an expert in it, but I do like to watch it. And what I think about technical analysis is that one of the big reasons that it is important, especially let's say for the commodities themselves, as opposed to companies or whatever, is that the commodities are heavily traded. And so even if I'm not, but if you happen to be a technical analysis skeptic, even a guy like Jim Rogers, who's, a big, fundamental research kind of guy and so on, he said that, he pays some attention to it. And if for no other reason that he knows that there's a big chunk of the market that does pay attention to it. And it's one of these sort of self-fulfilling prophecies. If you reach these, these levels, then the buying or the selling, whichever it may be, really starts to kick in. And so it does have an impact. I really do believe that.
Boom industries are at the heart of the rising demand for silver. Total industrial use jumped from 491 million ounces in 2015 to a record 680.5 million ounces in 2024. And it's not slowing down. Projections show a further 9% increase to 711 million ounces this year. The primary driver? Electronics, especially photovoltaic solar panels, have become a significant force behind the surge in industrial silver consumption. Peter Krauth and other experts are noting a rising wave of interest in silver, particularly in speculative stocks. Some of these plays have already posted gains north of 60% in 2025. Krauth draws a parallel to the early 2011 market, but with a key difference. This time, the momentum is being fueled by structural supply deficits and critically low inventories. Industrial demand now accounts for 60% of all silver use, and with record solar installations underway, the gap between supply and demand looks set to widen even further. At the same time, investment flows are picking up sharply. In just 3 weeks, silver ETFs absorbed nearly 1,000 tons. Krauth sees this as early-stage momentum in what could be a prolonged and robust bull market. The bigger picture reinforces that view. In the first half of 2025 alone, 95 million ounces poured into silver ETFs globally, according to Silver Institute data. That's more than the total ETF inflows for all of 2024. Total holdings have now reached an all-time high of 1.13 billion ounces. This isn't just a number, it's a signal. The fact that 2025 inflows have already outpaced the previous year points to growing institutional conviction that silver isn't just an industrial metal or speculative trade, it's becoming a long-term strategic asset. Let's get back to the interview.
I mean, I'm getting emails from people who are subscribers or interested in becoming subscribers to my newsletter, and they're asking, what kinds of things do you cover? Do you think that we're too far along? How would you allocate? Now, I'm not an investment advisor, so I can't give that kind of advice. I only tell people, kind of how I see things for myself and how I would handle things for myself. But there is absolutely a lot more interest and questions about silver itself, about allocating to the more speculative end of silver. So the developers, the explorers, even the pre-discovery explorers, and I've honestly, I have seen a group of stocks in the portfolio from January. You take a certain handful of stocks, they're up on average 60%. This is, I'm going to say, probably 8 or 9 different stocks are up on average 60%. Some of them, one in particular, one of the standouts was, and I was a little bit late on that, my fault, but I had followed this company right around the sort of 25 to 30 cent price range. I ended up recommending it around 45 or 47 cents, I believe, and it made it to $1.20, and it took about 6 weeks. It was just unreal. I've not seen anything like this for quite some time. I'm going to say the last time would have probably been in the months, sort of leading up to April of 2011, when silver went to 49 and change, and touched that or was close to touching that $50 level for the second time in history. But I think we have a very different environment now. We're now facing structural deficits in silver, and supply is nowhere near close to coming to meet any of these deficits. The only way these deficits have been met has been by drawing down on above ground inventories. Those continue to stay very low. So we have a fundamentally very strong case for early days in the silver bull market. And I mean, you know, uh, again, the bottom line, or let's say the takeaway from this is it's certainly not too late. It has begun to become what I feel is a little bit frothy in sort of this early part. I think, if we're honestly actually a little bit lucky, we might get a little bit of a correction, or at least a consolidation for a little while. It would be very healthy, but it's still early days in my mind. Absolutely. So I see that demand really coming from industrial demand. We're at a point where it's something like I think it's nearly 60% of all consumed silver goes to industrial, and a big chunk of all of the silver, about 20% or so, goes to solar panels alone. And I don't remember the specifics, but I've been reading some research recently that earlier in the year had said there had been research saying, well, there's risk of recession, etc. With all this sort of tariff deal going on, there's a risk that we're going to see solar panel continue to or we're going to see solar production sort of level off or slow down. There's a little bit of an effect of thrifting, meaning looking for ways to use less silver for solar panels. But we haven't seen that happen at all. In fact, there have been record numbers of solar installations. China is a really big one, not only for production but for installation of solar panels. for different reasons. I think that, there's been government incentives to roll out solar installations in China, and they've been installing record amounts of solar. So the demand for silver to produce these panels continues to grow. And so I think that, some of the forecasts where we saw the Silver Institute, for example, I'm trying to look at these numbers actually right now. They said that they expected to see industrial actually drop slightly, like 0.5% from 2024 to through 2025. And I think that that's going to probably end up being wrong. I think we're going to see that actually grow a little bit. And they said that they expected coin and bar demand to go up by about 7% in 2025 over 2024. I think that'll be taken out to a much, much higher level. And they also said that they expected inflows into silver ETFs to actually be up by about 14%. So far, they've been, I don't know about percentage wise, they've been right on that call. But I was saying to you earlier that been some numbers just recently that showed the inflows of silver into ETFs since the beginning of June. So from early June to July 4th was 990 tons. Half of the inflows had happened in a matter of about 3 weeks. So, people are really starting to pay attention to silver. It's not just the industrial demand. It really is starting to flow into buying silver, physical silver, or at least the ETFs as a proxy to physical silver. And so, these ETFs, especially the better ones, they have no choice. They have to go out and find the silver to match the buying of the outstanding shares that they have to issue for the ETF. So that shunts a demand into new physical silver, and I think a lot of that's coming from the above ground inventories. As I say, there just is no new supply to meet the shortfalls. That's another point, actually. The Silver Institute said that there was going to be a market shortfall of about 150 million ounces this year. 117 million ounces this year, and that in 2024 it was 148 million ounces. I think that's going to end up being wrong as well. I think that there's going to be a bigger shortfall than they forecasted. And it'll probably be at least close to last year's of about 150 million ounces if it doesn't surpass it anyways. So it's just a very, very robust market. Doesn't seem to be slowing down at all. And, people should have exposure to it. You don't have to have exposure and it being sort of on the higher risk end of the spectrum. I give a couple of examples in my book, The Great Silver Bull, of you had two of the biggest market cap silver companies. So that being Pan American Silver and Silver and what's Wheaton Precious Metals today. It used to be Silver Wheaton. So that's a royalty company. Huge market caps at tens of billions and so on. And these companies, at one point or other in sort of the first half of the secular bull between 2001 and 2011, on different time frames, were both up something like 16 or 17 times. One of them was up that rate, and I think it was a space of about 2 years. The other one took about 5 years. That's incredible returns for some of the largest market cap silver companies, public companies in this space. So that just shows you don't have to take sort of these outsized risks, but even the small guys have really been paying off lately. So, spreading it across that is not a bad idea either. You just have to know, what you're comfortable with.
It's not hype driving silver anymore. It's raw demand colliding with shrinking supply. The surge in solar, electronics, and ETF inflows is tightening the market faster than many anticipated, and the charts are reflecting it. What's unfolding isn't a short squeeze or a seasonal bump. It's the early stages of a more profound shift in how silver is valued and where it fits in the global economy. With key resistance levels crumbling and inventory vanishing into long-term holdings, silver's next big leap may not be speculative, it may be overdue. Is the market finally waking up to the fact that silver isn't just trailing gold, it's quietly leading the charge? Share your perspective in the comments section. If the video resonates with you, Join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.